Hello, I'm Mario Toneguzzi, managing editor of Canada's podcast. Joining me today is Todd Hirsch, an economist, author, and speaker based in Calgary. Thanks, Todd, for joining us today.
Great to be with you, Mario.
All right, we're going to talk about the labor force survey, which Statistics Canada put out today. Interesting stat, first of all, when we look at unemployment or employment, sorry, 387,000 plus from a year ago in February, 1.9% increase. In February, it was steady after 3 months of a rise. What's happening with the labor market, Todd, from what you see in Canada?
Well, it's fascinating because, just as the labor market was gaining a little bit of traction after a very sort of tepid 2024, it looked like we were gaining a bit of traction, but then February hit and we just see this holding pattern. We didn't see job losses, but we didn't see a lot of job gains either. It was basically unchanged. And the only thing I can attribute to that is, this madness with tariffs. The labor force survey was conducted between February 9 and 15. So already by February 9, we had heard that the tariffs were on and then they were off, another 30-day hold. I think this was just a month of employers really just holding steady, bracing themselves, waiting to see. Obviously, the tariffs hadn't come in, so we didn't see a lot of job losses, which is great. But we also saw, I think, some hesitation for employers to add a lot of staff too.
Okay, let's talk about the unemployment rate. It was 6.6% in February, and it's fairly steady from before. But the unemployment rate was at 5.0% in March 2023, peaked at 6.9% in this past November. What is that, from a economics point of view, that's 6.6%. How does that fare in the general scheme of things for a country?
Well, it is a little bit high. You'd ideally like your unemployment rate around 4.5 or 5%. In Canada, that would typically be described as full employment. You also, by the way, you don't want it too low, like around 3%, because then there's too much labor market tightness, difficult for companies to hire qualified people. So at 6.6%, it is a little elevated and it has trended a little higher over 2024. And I think that reflects sort of the lethargy or the slack in the Canadian economy. The good news is it doesn't seem to be spiking too much higher at the moment. You really don't want it above 7%, but it all comes back to where tariffs take us. These days, there's really nothing else to talk about but these tariffs.
Yeah, and we're going to talk a little bit about that further in a few minutes, but I also wanted to ask you about the labor force participation rate. It declined in February to 65.3%, the first decrease since September of last year. Um, First of all, maybe can you explain what the labor force participation rate is and
Yeah.
what may be the factors behind a decline?
Yeah, so the labor force participation rate is actually an indicator I do like to follow pretty closely. It's really just the percentage of the working age population that is engaged in the workforce. So they're either working or they're looking for work. Now, there might be lots of reasons why adults over the age of 15 are not in the labor force. They might be retired. They might be a stay-at-home caregiver. They might be a student. But in the survey, they would respond, are you working or looking for work? And if the answer to that is yes, you are included in that labor force participation rate. It's never great when we start to see the labor force participation rate start to fall. And, I am a little concerned that we did see it fall in February. Not sure what is driving that, but if we start to see a trend of falling labor force participation, to me that signals that Canadians are losing confidence in the work market and they're just dropping out. So if they were looking for work, they might just become discouraged and give up. And if you give up looking for work and you say, no, I'm not looking for work, in the survey, you're not participating in the labor force. You really don't want that number trending downward too much.
Yeah, let's talk about the tariffs and the trade war. And this this story changes by the day, it seems, right?
by the hour sometimes.
By the hour, yeah. Just don't know what the heck's going on. But how long can this continue without having like a real serious impact on the labor market here in Canada?
Well, I hate to use the overused word unprecedented, but we just really have never been in a situation like this. It really is madness. This must also, by the way, be frustrating a lot of lawmakers and business leaders in the United States because you really just cannot operate under this wild uncertainty, these on again, off again tariffs. I've even had some businesses tell me, we would rather prefer a 25% tariff, as punishing as that is, but with some certainty that that is going to be the rule of the game. At least we can plan around that. Right now, as it is, you can't make any plans. Donald Trump is the agent of chaos, as they say, and it's wild. I don't know how long this can go on. You have to think at some point level heads would prevail, but this is 2025, and level heads are scarce these days, especially in Washington. So we'll see what happens.
All right. And last question for you, Todd. One interesting tidbit of information I noticed in the StatsCan survey that came out today was that 3 in 10 working Canadians are willing to move to another province
Yeah.
for suitable work. What do you make of that?
It was I saw that stat too, and it was really interesting. And I don't know if Stats Canada, if this is a new survey, I haven't never seen them report on that. I would like to know if that number, that 3 in 10 number, has changed over time. But for Canada, you really want to see what economists call labor market mobility, the willingness for job seekers to move to another province. Now, this always comes with a cost too, right? Communities and towns and cities that have established populations, you hate to lose people.
Yeah.
And there are lots of reasons people would be reluctant to leave, obviously. Friends and family commitments, caring for aging parents, their kids in a good school. There's lots of reasons why people would be reluctant to pick up and move just
Yeah.
to find a job. But the cold-hearted economists, we really like to see labor market mobility because that acts as a really good adjuster. So workers will move to where the jobs are more plentiful and where demand is a little higher. And they might move out of regions where perhaps the unemployment rate is a bit high and maybe economic activity is a bit slack. So it helps even the unemployment rate and the labor market across the country.
All right. Wonderful. Thanks, Todd, for joining us today.
Thanks, Mario. Great to be here.
All right, that was Todd Hirsch, who is an economist, author, and speaker based in Calgary. I'm Mario Toneguzzi, managing editor of Canada's Podcast. Thanks for joining us today.